Howdy, Jacob here. Today we're looking at ON Semiconductor Corporation in the semiconductor and equipment industry, just under 32 billion market cap and enterprise value. They operate through Power Solution Group. It's Intellect Power and Technologies. It's intelligent power technologies, pardon, enable the electrification of the automotive industry that allows for lighter and longer range EVs, empowers fast charging and propels sustainable energy for solar strings. Okay. Been around since 1992. Growth has been pretty impressive, over double over the last 10 years. Return on invested capital recently, at least, has been in the low 20s, so very impressive. With margins of their operating margin almost as high as what their gross margin was 10 years ago. So, very impressive feat there. Balance sheet shows 2.5 billion cash on hand with 2.5 billion long-term debt and 794 million short-term debt. So a little bit of net debt there. Their 5-year average free cash flow, they're reinvesting like crazy, which we can see through their capital expenditures growing immensely, and their cash from operations is also growing, but capital expenditures are definitely very high, especially the last couple of years. So they're really reinvesting back into this business, and the use of cash for that is not bad, at least at these 20% historical rates of returns. So they if they do repeat what their historical return has been, then that's a great thing to do with the money, is to reinvest a lot of it, and then they also have made some acquisitions with their money and then bought back shares with their excess free cash flow. And they are sitting on a good amount of cash here, 2.5 billion, again with 2.5 billion in debt, but that debt figure has stayed actually gone down since 2016. So they are paying a little, they're net paying debt, at least in the last 5 years or so. And yeah, I think start ready to make some assumptions here. Let's say revenue growth side. I could see, I mean, semiconductor industry in whole is going to grow quite a bit, I feel like. And the EV companies are, um, they have, the government has said some crazy stuff about all cars being EV by some crazy soon date. I don't know if that's going to be the case, but that does mean that electric vehicles are going to get quite a bit of growth out of them. And so anyone supplying these products, if they're the main front runners, then that should help a lot. So let's say on the revenue growth side, maybe a 7%. Let's do 17p in price to free cash flow based on the end of 7 years. This is slightly above the market due to them having probably a little bit more growth than the average company, and then at least recently having historical rates of return on investment quite a bit higher than the market, and definitely higher than their weighted average cost of capital. So they are definitely creating business, which is great. Their margins have been pretty wild, so I'll probably do closer to the averages here. Let's do a wider range, 18, 14. Let's say they buy back 0.5% of shares because they have used a little bit of cash to repurchase shares, but they also have this stock-based compensation coming in. So if they repurchase, what is that, 300 million, 400, probably 250. Yeah, that so 250 million use of cash flow to repurchase shares. That'll be about this 0.5%, because they have historically reinvested quite a lot, made acquisitions with a little bit, bought back debt. So this gives them a bit of room to reinvest back into themselves, to get this 7% return a year. And with these current assumptions, it just looks like it's a little bit expensive at the moment based on my desired return. And I think it's a good business. I think that it does look pretty cyclical in the fact that margins have been as low as 4 or 5% in the most recent 5 years and as high as almost 30%. But I do think that this industry does have quite a bit of growth out of them, and I think that they're pretty much in the front lines for EV semiconductor supply, and so they should have some good growth out of them. But again, everything is the present value of all earnings and cash flow, and I don't know if that growth is going to be fast enough at this point. But I could very likely be wrong. I mean, I'm 100% going to be wrong on like being entirely accurate, but it's just my job to be as conservative as possible while still being realistic. Because if you're too conservative, you're never going to invest in anything. But if you're too optimistic, you're going to invest in absolutely everything. So there's always the balance game. It's investing is just as much an art as a science. And yeah, I hope you enjoy the video and have a great rest of your day. Thank you.